Hey freelancers, I am Karla Dennis, and I am talking to you today about the ultimate guide to freelance taxes, what you need to be writing off, and how you can avoid an income tax audit. Before we jump in, I need you to like, comment, and subscribe so you don't miss out on any of this wealth building information. Now, let's get after it. The first thing for you to understand is your tax obligations. Now that you are a freelancer, a gig worker, a side hustle person, you are a business owner. So you need to understand that your tax obligations all fall into the realm of business owners. If you are a single member LLC, or if you are a sole proprietor, you're gonna file your income taxes in with your individual tax return that is due on April 15th. If you are a multi-member LLC or you formed an S corporation, you're gonna file your income taxes on March 15th, a whole month ahead of the normal filing deadline that you are accustomed to. So make sure you prepare to file your taxes timely. In addition to that, now that you are a freelancer, you have to pay what we call estimated taxes. IRS requires you to file your taxes 4 times a year. Your first payment is due April 15th for the year that you're in. So let's say, for example, you're in tax year 2026. Your first payment for 2026 is April 15th, 2026. Your second payment is June 15th, 2026. Your third payment, September 15th, and your final payment is January 15th, 2027. 4 quarterly payments that you have to make. You have to estimate your tax and you have to pay them in quarterly, both federal and state if you are in a taxable state. The second thing you need to know is self-employment tax. When you are a freelancer, when you are self-employed, you have to pay your own Social Security and your own Medicare tax. Yes, this is in addition to income taxes. They didn't tell you about that. You have to pay it. It's 15.3% on top of the income tax that you have to pay. So for example, if you are lucky enough to make $100,000 your first year or $10,000 your first year, you're gonna pay 15.3% on net profit. I wanna be clear, net profit. That means all revenue minus expenses. That gives you your net profit. You're gonna pay 15.3% self-employment tax on net profit. And it's gonna be paid just like you're paying your income tax. So you have to estimate it and pay it in quarterly along with your federal income tax. The third thing that you really need to understand is making sure you track your income and expenses appropriately. This really gets the freelancers all confused. A lot of you think that you can just download your bank transactions and that is tracking your income and expenses appropriately. It is not. Don't do it. That is not how it works. You have to actually account for all of your income, all of the monies that are coming into your bank account, the money that people are paying you. If you put money in your bank account, that is not income. If you borrowed money from somebody and put it in your bank account, that is not income. So make sure you're only accounting for the total income that went into your account. So that's gonna be your total revenue, your total sales. In addition to that, account for all of your expenses, all the money going out of your account that is ordinary and necessary for you to run your business. For example, your advertising, your rent, your cell phone, your car payment if you're using it for business. Track your income and expenses and track it on a program, some type of app. Maybe use QuickBooks Online. Extremely helpful, extremely easy, but make sure you are managing your books and you're tracking your income and expenses. As a freelancer, you want to take advantage of all the common deductions for freelancers. Do not think, oh, I'm a freelancer, I don't have any expenses. Anything that you're doing or using to run your business is an expense. Maybe you're using your car, but you're also using that same vehicle to go back and forth to work. The percentage of use that is used as the freelance percentage is tax deductible. The home office is tax deductible. The cell phone is tax deductible. The insurance policy that you now have for your business is tax deductible. You want to make sure you're taking advantage of all of your tax deductions, your internet, your iPad, your computer, the paper, all of those things, the different apps that you're using. If you're utilizing YouTube, if you're paying verified to be on IG, all of those things are tax deductible. So you want to make sure you're getting all of your write-offs in as a freelancer. Retirement savings options. As a freelancer, you're now responsible for your own retirement savings. Now, I want to be clear. If you're working a W-2 job and you're contributing to a retirement account on your W-2 job, you can still contribute to a retirement account as a freelancer. You just can't double dip. You can maximize the amount that you're contributing as a freelancer. So make sure you're aware that you can start an IRA, you can start a Roth IRA, you can start a SEP, a solo 401k, but realize you're now responsible for contributing to your own retirement account. Let's not bank on Social Security being there because it may or may not be, but you're in control of making sure that you have a retirement account. Health insurance deductions can now be deductible as a self-employed individual. If you are paying for health insurance, you can take that as a deduction as a self-employed individual. You can take the deduction for your children and for your spouse or a significant other that you're carrying on your tax return. Because health insurance premiums are typically expensive, you want to make sure you're getting a tax deduction for those health insurance premiums, whether it is for medical insurance, dental insurance, or vision insurance, get a tax deduction for them. As a freelancer, there are audit triggers that I want you to avoid. The number one audit trigger is not reporting all of your income. Many times I will hear you guys say, oh, they're going to issue me a 1099. I never received it, so I'm not going to report that. Do not get caught up in that. Report all of your income. You want to do it correctly because Code Section 61, write that down, states that income is income from any source derived. So you want to report all of your income so that you can take all of your deductions. That's the number one audit trigger. The second audit trigger that I see is that a lot of you freelancers will not even report your income, period. You may have started an entity. You may decide, oh, I ended up losing money after you net the two together, the total income and the total expense. You say, oh, I lost money, so I don't need to report this. You have to report it because remember, you're reporting your gross income, how much you made at the top level, not how much you netted at the bottom level. Then you take all the expenses. I have seen so many people get themselves into a tax slinky and get audited because they do not report their income. The third trigger is not paying your quarterly estimated taxes. The first year, you can get away with not paying your quarterly taxes. The second year, absolutely not. The IRS will knock on your door and be like, hello, you didn't pay your quarterly taxes. We're gonna penalize you. So make certain you're paying your quarterly estimated taxes. So as a freelancer, you now understand that you have tax obligations that are different from an individual taxpayer. You are a business owner and you need to file your taxes accordingly. You need to pay your quarterly estimated taxes that are due 4 times a year. You need to understand estimated tax payments. You need to be tracking your income and expenses using a program like QuickBooks as an example. You also need to make sure you understand all of your tax deductions. In addition to that, you need to contribute to your own retirement account. You need to take your self-employed health insurance deductions to include vision and dental. And you need to make sure you do anything to avoid getting audited. Pay your estimates on time, report all of your income, and stay under the radar because at the end of the day, you want to level up your business, become a full-fledged business owner, and you can only do that when you're doing the right thing. And speaking of the right thing, you need to now like, comment, and subscribe so you don't miss out on any of this wealth building information. Now get after it.